Hello, everybody. Hope all you are well. My name is Mark. I am the stock market jobber. Um, I just want to give you a little bit about my background so you actually watch this whole video because over the last 2 decades, I think I've accumulated some competency in trading. All right. I spent about 20 years in the institutional trading world. I traded directly for Steve Cohen. I traded directly for Mario Gabelli. When I say directly, I mean I actually spoke to them every day. I spent some time as a market maker. I was the head of trading at 3 institutional money managers where I oversaw the trading of various strategies. Oh, yes, and hedge funds. I know everyone's fascinated with hedge funds. Um, but anyway, I've been around the block a few times, and I think at this point in my life, I just kind of want to give back and teach people. So, all right, enough of that. Yay me. Let's take a look at Tesla because this isn't really a recommendation, but there's something that we can learn here. I mean, you can pretty much learn something on every chart. I think that every chart tells some lessons. Now, I want you to look at this indicator that's at the bottom of this chart here. This is called the RSI indicator, the Relative Strength Index indicator. And when this thing reaches extremes, when these blue lines reaches an extreme, it illustrates conditions that are either overbought or oversold. What does that mean? Most of the time, a stock or a market or whatever it is you're looking at, in this case a stock, crypto, bond, whatever, but in this case a stock, most of the time it stays within its typical or average trading range. All right, that's why it's called typical or average. If it gets above that, we call that overbought. If it gets below the range, we call it oversold. Now, why is this important? Well, this is important because things that are overbought or oversold tend to revert back to the mean or reverse. All right. Now, we don't see the holding on the chart here, but Tesla has been public since I think it was 2011 or 2012. But look at this RSI indicator. This is last, I don't know, maybe November. This here, the RSI, got to the highest level this company has ever been at, or this stock has ever been at. This was a historic reading. And what happened? Right after we got there, the stock fell apart. See, there was like people were buying here, and it was almost became panicked buying. Investors are watching it go higher. They're waiting for it to come in to get a better price. They finally say, you know what, enough of this. I can't take it anymore. I'm just going to go pay whatever it costs. And there's the last people into the party. So we got to historically overbought levels, and sure enough, the stock fell apart afterwards. Now, fast forward to a week or two ago, and you'll see the exact opposite. The RSI got all the way down to here. This is the most oversold it had ever been based on this indicator. It was also at a level that was previously support. And sometimes levels that are support can become support again. Actually, I should have put an arrow there, but there's resistance here, support here. Levels that were resistance can turn into support, basically because of seller's remorse. People sell, and when the price goes higher, a lot of them regret doing so, and they say they're going to buy their shares back, and they place their buy orders at the same level they sold at. But the main point I want to make is that when something gets to a historic level or a historic reading, there's a good chance that there's a reversal coming. And sure enough, Tesla is up since we got to this reading, I don't know, 30, 35%. So you don't need to be too complicated. You don't need to overthink things. In the institutional trading world, we don't pay attention to silly things like Gabelli and Elliott wave. We look at what levels are important. Here we can see 110. We look at the trend. We can see we went straight up. And we look at the momentum. Extremely overbought is a sell signal. Extremely overbought, or sorry, let me say that again. Extremely overbought is a sell signal. Extremely oversold is a buy signal. So be sure you check out our site, stockmarketjobber.com. We talk about investments. We talk about pretty much anything that has to do with Wall Street. And we also spend a lot of time on history. I'm a history buff. And I really like the history of Wall Street. And the reason why it's important to understand that is because maybe the names of the companies have changed, maybe the people have changed, but guess what? Human nature does not change. So the same things traders were dealing with 100 years ago or 200 years ago is the same thing we're dealing with now. It's emotions, psychology, and yeah, so forth and so on, right? The best traders let the market tell them what to do. Before I go, I just got one more thing to say here. Jesse Livermore was a great trader back in the 20s, and one of the greatest statements I've heard, which is attributed to him, is that he said he didn't make his money by being in the market. He made his money by being out of the market. What does that mean? It means that he was able to be patient and wait for an opportunity to come along. He didn't just force money into the market. He would wait to see something like, oh, gee, this is the most oversold it's ever been. That's an opportunity. Let me come off the sidelines and get in and try to make money. So anyway, please let us know. Please subscribe to my webpage here. I think you will not regret it. And that's it for Tesla. Thanks, everybody. I will talk to you soon.